Yeah, we're ready. Okay. Okay. Hello. Sorry, everyone. Hello. Okay. We're going to get started. First of all, thank you to everyone for coming. We are the Machine Learning Society. Just so you know a little bit about ourselves before we start, we do have events every week. We pride ourselves in training people that want to break into data science, machine learning positions. Maybe they want to break into quant, something quantitative, data related. If that sounds like you, we have events on Wednesdays and Fridays. On Wednesdays, we teach foundational machine learning, and on Fridays, we teach Kaggle, which is a website that hosts data science competitions, and it's amazing for interviews. So if you think you're interested in one of these events, just join our WhatsApp group chat. Today, we've got the market making hackathon. The reason why I decided to host this is because I do believe that it's very relevant for industry, especially for those of you that want to go into finance. But also it combines machine learning, it combines research, data engineering, risk control, and also it's competitive. At the end of the day, you are going to be competing against yourselves, right? So we've designed a zero-sum game, which means that if there's winners, there must be losers. So yeah, without further ado, I'll just explain some of the basics of what we will cover today. Today, we're going to explain what market making is. We're going to cover some key concepts of market making, like beta prices, ask prices, spreads. We're going to show you how the actual competition goes. And we're going to do a simulation today. This simulation is going to be a simpler version of what the hackathon will be. So you'll get an idea of what it's going to be like live on the day. And it's good training as well. And obviously, I'm going to show you the hackathon structure, rules, what the prizes are, etc., etc. Okay, we're going to start with the theory first. It's going to be very simple. So what is market making? At its core, it's just quoting prices, right? It's coming up with a fair value of something and just saying, look, if I believe something is maybe worth £100, I'm willing to buy this for £95, and maybe I'm willing to sell it for £105, right? There's a difference in the prices in which you're willing to buy and sell. First of all, because there might be uncertainty, right? You might not know exactly what the fair price of something is, but also because you want to profit from the spread, which is the difference between what you're willing to sell for, which is the ask, and what you're willing to buy for, which is the bid. So yeah, market makers use quote prices. They take on the risk of possibly being wrong about the prediction, and if they are right, which you will be if you do this well, they can profit from the spread. Okay, in real life, you can make markets basically with everything. You can do it with crypto, you can do it with stocks, you can do it with options, even prediction markets. Maybe some of you know about Polymarket or Kalshi, which are quite popular right now. you will see there that there's a difference in the values in which you can buy and sell. That's just the bid-ask spread as well. How many firms do market making? A lot. You can see a few over here. Top trading firms, top banks do this very often, and it's very profitable. So yeah. All right. I'm going to be a bit repetitive here, but just so that you know, because this can get a bit confusing when you're doing it from both sides. The bid as the market maker is the price that you're willing to buy at, and the ask is the price that you're willing to sell at, which means that when you're the market maker, people will buy at your ask and sell at your bid, right? Basically, if you're not the market maker, you're going to buy high and sell low. If you're the market maker, you're going to sell high, and buy low. Okay, so yeah, the example, you've got £100. If the bid is 95 and the ask is £105, the spread is going to be £10. So just to make it a little bit interactive, can someone tell me what are the advantages of a tight spread versus a large spread? Like, why would you want to have a tighter spread than a larger spread? Yeah. To have more, but as a market maker, like, what are the advantages of having a tighter spread? Yeah.
Less risk.
So if you're a market maker and the spread is tighter, there's more risk because you're more likely to be wrong. The real value is more likely to be outside of the spread. Yeah.
You don't lose as much money as like you would in a large spread.
Huh?
You won't lose as much money as you would in a large spread.
You won't use as much money.
If you were to make a loss, you wouldn't lose as much money.
Yeah. A tighter spread is risk. Like the reason why a tighter spread is better is because at the end of the day, you're all competing against each other to be market makers, right? And if maybe we both agree that the fair value is £100, right? If I am willing to buy at £95 and sell at 105, and someone else maybe is willing to buy at £99 and sell at £101, right? Who would you rather sell to? To me, who I'm going to give you £95, or to the guy that's going to give you 99? Exactly. You're going to get You're not going to be the market maker because the market maker tends to be the person that provides the tightest spread. The bad thing about being the market maker is that if your spread is very tight, you're more likely to be wrong. Also, the profit that you make is not as large as well because it's a tighter spread, right? Maybe if it's worth £100 and I'm buying for 99, I can sell for 100. Like, I'm only making £1 per share, whereas someone that maybe has a larger spread might make more money if I'm not in that market. All right. So there is a lot of risk in market making, especially in this hackathon, as you'll see in a bit. But yeah, if we were saying, like, you can imagine that someone quotes a bid ask of 95 and £105, right? What happens if the true value of that asset is actually 120? What happens if it falls outside of this spread? So a smart investor might realize that you mispriced something, and they might decide to buy from you at £105. Okay, for you as the market maker, you cannot refuse a trade. You have to take it, even if you don't want to. So this person will profit from you. They will make £15 per share, right? If they are very certain that you're wrong, they might trade a lot with you, right? So yeah, in our simulation, as you'll see in a bit, this can make you run out of money immediately because there's only going to be a single person each round that's going to be the market maker, and everyone else is going to be trading against that team. Okay, so big reward, big risk, basically. If you're wrong, if your prediction falls outside of this interval, you can run out of money. If you run out of money, you will be eliminated immediately. You can be out in round 1, which is not great because it's probably going to last for an hour. So yeah, just know that you're going to have to manage risks. And this is an example. We did a test with the committee members the other day. As you can see, some people did really well. Maisha did amazing, right? She won the hackathon. But she did amazing because she managed to exploit people that were not very good market makers, right? This is the other side of the spectrum, right? Our friend Akbar here was very confident that the value was a given amount, and he provided a very tight spread on that amount. He was wrong, and Maisha, who's very, very greedy, started buying like crazy, and Akbar was out of the game immediately. Just know that this can happen. So yeah. Okay, now we're going to go into the actual rules of the hackathon. Are there any questions before we move on? Yeah.
Did society members participate in the hackathon the exact same one that we're doing right now? Was it the same rules, same game?
Yeah.
And do they get to participate in this one?
They can participate if they want. They cannot win any prizes. Yeah. Okay. The actual hackathon. Okay. The structure is going to be as follows. There's going to be 9 rounds. So you're going to get 9 chances to be the market maker. In each round, there's going to be a single market maker, which is going to correspond to a single team. Once again, on each round, there's going to be a different data set, right? You can imagine of this data set as describing the qualities of an asset. You're going to have some predictors, which you're not going to know. They're just going to be columns labeled column 1, column 2, column 3. And you're going to use those predictors to try and predict the target. And here you can use machine learning, you can use like linear regression, neural nets, XGBoost, whatever method that you feel comfortable with, right? Once you've trained this model on this data set, there's a single value that you have to predict. The market is going to be around this value, and this is the value that you're going to trade. Every team is going to start with a cash balance of £100,000, and you just have to try to grow it as much as you can without running out of money. So yeah, for each round, everyone will just submit their bid and ask spreads, right? Imagine that your model spits out, I think this is £100. You're going to submit, okay, maybe I'm not very certain about this. I'm going to say that I think it's between 80 and 120, right? Whoever provides the tightest spread will become the market maker for that run, and everyone else will trade against them. Hopefully, as you know, but I mean, we'll do the simulation anyways. You will see that it is risky, but it's also very profitable. Think about it this way. If you do provide a spread and the true value falls within that spread, you will guarantee making money on every single trade, no matter what. Okay? And teams will be forced to trade against you as well. There's a minimum amount that they have to trade against you on every round. Okay? So just as a simple example, right? Like you can imagine there's 4 teams. They also made their predictions, right? You've got the bid and ask prices here, 91.10, 95.101. And Team C here has a spread of £5. So Team C will become the market maker for this round. So every other team must buy at their ask price and sell at their bid price. That's just to say they have to buy high and sell low. Right? So you can either buy for £98 or sell for £93. And you are forced to trade each round. There's a minimum amount. I think it's set up to 10 shares. So, yeah. Okay, as I said earlier, if any of you runs out of money at any point, you are going to automatically be eliminated. This can happen both ways, all right? This can happen if you are the market maker and you get obliterated by everyone else. So in that case, you'd be out. This can also happen if you're a short seller, all right? When you're a short seller, you sell something before you own it, right? So maybe you think that the market maker is giving a price that's too high, right? So that they've gone crazy. So you're saying, okay, I'm going to sell to them at that price, hoping to buy for the fair price later on, right? If it turns out that you're wrong, if it turns out that the actual fair price is an infinite amount of money, maybe you sell for £100 and you have to buy it back for £500, right? Or maybe you have to buy it back for £1,000. When you're short selling, the amount of money that you can lose is infinite. That can make you go negative, which means that you're out as well. So the safest thing you can do is buy. So once you know this, it must be clear now that this is not just about prediction. It's about measuring your confidence, measuring what your error will be like, and managing risks, making sure that you don't run out of money, making sure that you stay for the long run over the nine rounds that we're going to be trading. Okay, now we're going to go over the prices real quick. So that we've got a few categories. The first one is P&L, right? So you start with £100,000. At the end, we're going to have a list of how much money everyone has. The first team will get £150. These are going to be Amazon vouchers. The second team will get 50 quid, and the third team will get £25. Then, usually these hackathons are, some context here, usually they're won by like a team of like 3 or 4 master students or postgraduates. So we've got a best undergraduate performance, right? This is for the team of all undergraduates that performs the best in the P&L category. You can see this as a bonus, right? If it just so happens that an undergrad team wins, they will get £200 because the bonus is added on top. Then we've got some prizes provided by the school as well. This is a Growth Vision AI. Basically, long story short, very quick, it's a camera, but the chip also allows you to run some machine learning algorithms. So you can have some cool little projects to play with it. And this will go for the team that has the best Sortino ratio. You can look this up later on, but very roughly, the Sortino ratio is a measure of risk-adjusted returns, which penalizes you if you lose a lot of money in one go. Even if you end up winning, your Sortino ratio might not be very good if your P&L is going like this. Okay, and this one's my favorite, the lucky team. We'll spin a wheel, whoever team it lands on gets 25 quid. Okay, this will be fun. This is always the best prize to give at the end. Okay, now we are going to do a simulation. Let me see. Okay, so in this simulation, we are not going to do any data sets. This will be a simple version of the hackathon. I'm gonna tell you to estimate a value, and you're gonna have to try to estimate, and you're gonna have to measure the uncertainty. All right. If you run out of money, even though this is just a simulation of the hackathon, you will be eliminated. It's just the way the software works. I cannot change it here live. So also one thing, imagine that you will not, but imagine that you know the exact value. You still don't want to get a very tight spread and be the market maker, because if it's very tight, you're not going to make a lot of money, right? If you know that the value is exactly 3.14 and you quote 3.13, 3.15, you're going to make a cent, provided traded, and we're trading with £100,000, right? Okay. So you should have received an email. Well, I actually sent a few because it was a bit buggy, but you should have received an email if you registered with your team, and this link will have a URL that you can use to join the competition. This was sent to the person that registered on the website. Now, if the person that registered is not here, if you do not have the email for this session, you can just join someone else, just like join a team for now and play with them. But just know that for the hackathon, you have to be properly registered, and we need your emails to give you your own URL. Okay? Yeah, you're looking concerned. Huh? Did you not register on the website? Okay, we'll deal with you. Just stay here. Okay? Like, just at the end. Yeah. Thanks so much. Yeah, of course. No worries. Just get it. All right. You get, what team are you again? Got two T's. Let's see. You didn't get an email? Let me see. Okay, two T's. It should have been sent to this email. Let's see. Yeah. There it is. Maybe another. Maybe in spam. Spam. Let's see. What's your email again? EC23. This one?
Yeah.
Let's see. Did you block me?
I got this one.
Yeah, no, that will not work.
Do you know if the links were actually sent out?
You see? Yeah. Like if not, it's because the email was messed up or something. What's your email again?
Maybe I can change it to my personal.
Yeah, what's your email again? EC23881238881.
Yeah, that's me.
Yeah. Hello. See? There you
Yeah,
go.
there we go.
Okay. Yeah.
We didn't receive an email.
Did you sign up with the team name?
Yes.
Oh, what's the team name?
Chanko Trading. CHANKO Trading.
Tanko Trading. It should have been sent to any of these three emails. No one got the email?
No one. Yeah.
Okay.
So this one is mine.
Yeah, I send it. Only one person has to do it. So.
Do you mind sending it to my one, sorry, because this one he's not here at the moment. Sorry.
Okay. Yeah. Sorry. Which one is it?
This one, the second one.
Okay. Hi. Like that, Tanko Trading.
Exactly.
Yeah, it's interesting that they are sent, but they just get lost in the way. Okay. There you go.
Could you send him as well?
Whoa. Wait. Oh, wait. You.
I don't know. Is it here? The code. The link.
You've got no connection. Are you sure you didn't get an email like
Right now.
6:25? Yeah.
Same issue, we didn't get the email.
Oh, I just got it.
You got
I
it?
didn't have Wi-Fi.
Okay.
Check your Wi-Fi.
The only email that I got from you is this one.
You didn't get the one at 6:45? Okay. Just real quick. Okay. Just type your email here. Are you here, this guy?
Yeah.
Yeah. There you go. And what's your team name again? Sorry.
DTS.
DTS, like that. Like that.
Yeah.
Okay. Only one person in the team has to do it, so you should get it. Okay.
So quickly, we all submit a bid and ask. Whoever has the smallest spread is the market maker. Everyone else buys. The ask sells the bid. And then at the end of the round, you don't have to be flat. It's just kind of market to market.
Yeah.
Okay.
Yeah.
I only got this mail from
25. Okay, you just. What's your email? What's your name?
Ahmed.
Ahmed. What else?
No, with T. Ahmed. AHMET. ADLI, my surname.
AD. Oh my God. ADI.
LI.
Like that? No.
LI. Yeah.
Ahmed Aldi. Okay. And what's your team name?
Oh, okay, computer. The email here.
Okay, computer.
Like the group name, you mean?
No. Yeah, the group name. The group name.
Group names, okay, computer, yeah.
Like that?
Yeah. The K is like not capital, but should be.
There you go. That's the one that I don't know why they're not arriving. But yeah. Nice. You'll get that one. Yeah. What's your team name?
Team Porsche.
It's the last email you got.
Yeah,
Go on your email.
Yeah. I took
No, this one. Oh, you didn't get the
Or is
625
it
one.
the output?
No. Just type your email here. Oh, did you not get it either? Huh? Gmail. I sent it to you on Gmail. Okay.
Yeah, I just have a clarification question. So we can't see any data at all.
No worries. I'll be sorted.
Okay.
Yeah, before the end of today, no worries. Okay, there you go. What's your teammate number? Your team number? Team name, sorry.
Team name is Porsche, right? Team Porsche. Yeah.
Osha, okay. See. Oh, yeah. Did you sign up with any other team? Did you sign up more than once?
No, this is the other.
Okay. That's so interesting. Yeah, you will. Okay, there's like 3 emails here. Okay. Sorry, we will not be able to do today. Just join join another team for today, but we'll make it work for the actual hackathon. Okay. Okay. No worries.
This is the guy from my team.
Okay.
He created the team.
Okay. Did you get an email?
I did get an email.
At 6:25 p.m. The last email. Yeah. Okay, we're gonna have to get started soon. So.
Yeah, I got the email at 6:25.
6:25.
Yeah.
What time? No, that's not 6:25.
Where I literally just saw it just now.
No, because I sent it to you because it wasn't
The other
working.
one, okay, let me check. I did get
Didn't get it. Okay, all of you are missing your email. Did you sign up with your emails? Okay, ask him for the email
check
then.
the junk.
Oh, I mean that I'm not gonna be able to get if I have the email I can retrieve it. Well, what's your team name? Let me see. Huh? What again? Travelers? Just come here. Type it. See. Type your team name there. See.
He doesn't have the email. Huh? He doesn't have the email.
Okay. Okay, I'll send it now. The traveling sales. Okay, yeah. Okay, this is the one. So Eric didn't make it.
Yeah. Oh yeah.
Eric.
Signed up.
Okay.
He didn't. He did.
Okay. Just have your email here.
Let's put my Queen Mary one or
Any. Okay. There you go.
yeah, thank you.
Close. Yeah. What's your team name?
OS bot.
OS bot like that. No.
With the lower,
Like that.
With the lower, with the lower dash.
Okay. Yeah, I don't know why it didn't send. Sorry, you're gonna have to join someone for the
Okay, no worries.
for the thing.
But can I send you an email later to like confirm my team?
We'll make it work. I mean, there's been problems, so I'll make everyone send 2 emails to the show. And I think maybe it's not working very well with the Outlook emails.
May I have your name
Yeah.
just so when I send you an email, just so I can tell you
Yeah.
my team and everything? Is it all honesty, you're still like setting
That's
up?
me. Yeah.
Who do you send it to?
Huh? I should have said they're automated, so I mean, right now it's impossible for me to like actually return the team. Okay, you guys. Did you just create it today? Did you register on the website?
Register on the website.
What's your team name? Yeah. Concurrent what? Sorry. You didn't get the email sent to a Zane? No. Okay, just give me your email and I'll have your email here.
Is it the
An email.
with that?
I don't know, but it doesn't. Okay. What do you want to do? Like, yeah. Yeah. Okay, that one. Okay. If you get it. Okay. You get it? Yeah. Okay. Amazing. Okay.
I haven't registered yet.
Okay, you're gonna have to send someone to me now. Yeah.
So today I have to buy this thing or later I
Yeah.
can do that.
We'll do it. We'll do it at the end. No worries. Just make sure to go back to registration.
Okay.
Before we start it. Okay.
So I can join tomorrow.
Yeah. It's like later it's fine. Okay, everyone. Hello. Okay, we're gonna get started with the simulation now. Sorry that there were some problems with the email. So just to make sure we're doing things right, we're gonna send you another form where you're gonna have to put your team name and you're gonna have to put an email. I do recommend not using a uni email for whatever reason. Whenever we send these automated emails to the university, some get blocked. It's probably because they're automated. So, yeah. Now, most people hopefully have signed up into the software. You've put your URL code. If you didn't manage today, or you are not fully registered today, or your teammate didn't come, you can just join the team today. But we'll get it sorted for the actual hackathon. This is just a simulation. Okay, is everyone ready? Yeah. Yeah.
You said something about elimination, right? I didn't get it.
About what? Sorry.
About elimination. You said
Well,
if we-
eliminations. Yeah, if you run out of money, you get eliminated
Out of the competition.
out of the competition.
This round.
Huh? For the simulation as well, because the software is the same one. So you will just not have money to buy or sell anything if you run out of it. So be safe, basically.
So what about I say I come to 5,000 pounds?
Huh?
Do I start round two with 5,000 pounds or do I get?
No. Like the money restarts when we do the actual hackathon, obviously.
So just don't get it.
Yeah, just don't get eliminated. Yeah. Okay, everyone. We're gonna start with the first question. Everyone. Okay. There you go. This is the first market that you're gonna make. All right. I'm thinking of a number between 1 and 100. Just create a market for that. You can imagine this asset as being worth either £1 or £100. You have no idea. It's in my imagination right now. So yeah, just try and create a market for that. Yeah.
These are the
Huh?
YouTube thing.
Yeah.
So here, are we trying to mitigate risk at the beginning?
Yeah. Like you know that pretty much the average is going to be 50. To be a standard deviation. I mean, if you do between 1 and 100, you will probably be right. You'll probably not be the market maker.
Yeah.
You'd probably make money from between 2 and 98. So there's a value that's like kind of fine. Yeah.
Because understanding human psychology, oftentimes when people want to choose a number, sometimes they choose a number like 7.
That's up to you. It's up to you. You need to figure it out. All right, we're going to do 1 more minute, and we're going to close trading. But we're going to close the submissions in 1 minute. Yeah.
Is that the name of, can I share this with people because they don't have the, it's not working.
It's not gonna work. They have their own URL for it. This is the control center. Okay.
For some people it's not.
Okay. We'll have to make it work. It's a good thing about doing a simulation today. Part of the reason why we did it. All right. Oh my days. All right, everyone. Can I have your attention for just a second, please? So, for how many of you the app is going really slow or crashing at the minute? Yeah. We will fix that. It was just not originally made to handle like 100 people. So that's why it's struggling right now. We will do it in a different way. All right. We're all just going to close our laptops. Close them. Okay. And we are going to do this old school. We're going to create the markets live. Okay. So if you're a team, if you think you can provide a very low spread, just raise your hand and tell me what your spread is. Any team, just raise your hand. Yeah. No, but what's the spread is the difference between the bid and the ask. Huh? Okay, 8. Can anyone beat 8? Yeah. 5. Can anyone beat a spread of £5? £6. Oh, no, it has to be lower. Can anyone beat anything lower than £6? 4. £3. £2. This is not going to go well. £1. Okay, that's as low as it goes. All right, everyone. Our market maker here, who is about to be eliminated, believes he can guess the number that I'm thinking from 1 to 100 within 1. So, can you please give us your bid and your ask? All right. So he guessed that I'm thinking of the number 68. If you believe the number is higher, you should raise your hand. If you believe it's lower, I guess do nothing. Okay. All right. The number I was thinking of is 2. Right. So basically, because he gets 68, this guy would have been buying at £68 and selling at 2. So that wouldn't go really well. Obviously, when you are the market maker, if there's uncertainty, you should reflect that on your prices. In my opinion, for this thing, a spread that's like lower than 50 is just gambling. You're probably going to lose money. Okay. Next question. The next one will not be that silly. All right, everyone. Yeah. Huh? Well, like just a very, very simple rule of thumb, right? The number is going to be between 1 and 100. So you could just give a spread that's 99. And if someone trades with you, you're going to guarantee making money, right? Because the number is going to be on the inside. It doesn't matter if they buy for 100 or sell for 1. Like when the price gets settled, you're going to make money. Obviously, that's a guaranteed, right? If it was 1 to 98, you'd probably still make money. And even if you did lose money, you'd lose it from people that are buying at 98 and selling at 99. So you wouldn't lose that much money. So you can probably make the spread a bit smaller. Maybe you could get away with like 25, 75. You'd make money 50% of the time. And the other percentage of the time, people would probably get the direction wrong. So yeah, just rule of thumb. There's no actual precise logic behind this. All right, the second one. Yeah.
When do you reveal the true value?
The true value was 2.
No, like the first step is choosing the market maker.
Yeah, and everyone traded just by raising their hands or not. And we're doing this now because the app is just like crashing. But yeah, just next one. I'm going to start a timer. which I just started now as we speak. And I'm going to post it at some point. And you're going to have to try and guess when I post it, right? So I'm just going to be there waiting. And I posted like 3 seconds ago. So you should try and guess what number there is in here. So you can try and create a market for it. All right, who can provide a spread for this market? Anyone? 79. So
72.
okay, so your spread will be 2 then. Okay, 2. Can anyone beat that? Yeah. No, just give me your spread. 1. Okay. Can anyone beat 1 second? No? All right, so you think it's 7 to 8 then? All right. So if you believe it's less, right, you should sell for 7. Who here would sell for 7? Okay. If you believe it's more, you should buy at the ask. So if you believe it's more, who here would buy for 8? All right. Turns out the actual value was 8.8. So those of you who bought at 8, you made money. The other ones lost money. Yeah, if you were the market maker, there were more buyers, so you lost money as well. All right. Going to go on to the next challenge. All right. Look at this, everyone. How many pages does this book have? Can you guess the number of pages? Not that simple. All right. Who can provide a market? Anyone? Anyone can give a spread? Ah, no way. 2. Huh? Okay. So someone here knows the book, maybe. Maybe not. Okay, so your spread is 2, you said. Okay, can anyone beat 2? All right, just give your values.
766 or 768.
Okay, can anyone beat that? And we're going to base this off the number that it says at the end. Okay. What? Huh? Your bid is 1, 767. Okay, his bid is 1. Who here thinks it's, well, I mean, your bid is 767, 768 then?
Yeah.
Okay. If you think it's less, raise your hand. Okay, everyone thinks it's less. If you think it's more, raise your hand. To 768, yeah. Well, I'm very sorry, but it was less. It's 745, at least for my edition, and the number that says over here. I'm sorry. Okay. All right, everyone. You're gonna want to pay some attention here. All right, just look at the screen real quick. Okay, how many monkeys can you see on the picture? Oh my God. All right, who can give me a spread? Any spread? 2. Can anyone beat 2? Huh? Okay, 1. 0.5. No. It can go. That's as low as it gets. Okay. What's your spread?
8 to 8.5.
Yeah, you're never gonna make money. All right. So his spread is 7.75 to 8.25. So basically, if you believe there were more monkeys on that picture, you can buy for 8.25, and you can raise your hand now. If you believe there were less than 7.75 monkeys, you can raise your hand and you can sell at that price. All right, I can now reveal it was 7 monkeys. So, yeah. Oh. Right. All right, next question. How many different people signed up for this hackathon? And we are using a value that was taken yesterday at about 8 p.m. Different people, not teams. All right, we can provide a spread. Anyone? Yeah. 15. 14. People. 12. 10. Can anyone do lower than 10? 5. Oh, lots of sense. Just so you know, loads of people didn't come. 5. Okay, he's making the market. So what are your prices?
110 to 120.
No, it's 5.
125.
So what's your two values? 120 to 125?
110 to 150.
Okay, 110 to 115. So if you do believe that there were less than 110 people signed up, you can sell for 110 and buy at the true price. Anyone here believes it was less than 110? Okay, nice. Those of you that remember that there's an email that says that over 150 people signed up and would like to buy. Yeah, there you go. We had about 160 people roughly yesterday. Huh? I can start going. Huh? Yeah. Yeah. But there's people that couldn't make it to this one that are watching on YouTube. Yeah. Right. Next round, you're gonna want to put some attention here once again. Okay, think fast. Count how many times the letter N appears. All right.
No way. Oh, no way. Yeah, man. That's crazy. No, these people are not counting.
All right, can anyone make a market, please? Yeah. 45. 0.5. Okay. Okay, yeah, you make the market then. Yeah. 13 to 13.5. Okay. If you believe it was less than 13, you can basically sell at 13. Okay. Okay. And if you believe it was more, you can buy at 13.5 and sell at that value. Okay. No one. Okay. Everyone sold, so you didn't make any money, even though it was 13. Because you basically sold for 13 something that was worth 13. So you were making 0. Oh, that was brilliant. Okay, next one. All right. Can anyone guess the percentage of battery on my phone? Okay. Have you said it? Okay. It could be anything. Right, can anyone give a spread? 1. Okay. He makes the market then? Well, what are your values? Okay, the market maker is quoting 42 to 43. Just so you know it, this is fun, but in the actual game, this is a prime way of getting eliminated in round 1. So, yeah, but yeah, he thinks it's between 42 and 43. Those of you who think it's less, raise your hands. If you think it's more, you raise your hands. It was 54, so you would have lost nothing. All right. It's 2 more, and we'll do a quick demo. Okay, this is gonna be fun. We are gonna roll 6 dice live. All right. And whatever the total value is, it's the fair value of the market. You're going to see the roll in front of you. So yeah, just try and give your spread. We're going to add up the values, so it can be anything from 5 to 30, right? So
So it'll be 26 minus 6. So it will be plus minus 18.
right, can anyone provide a market for this? Any spread from anyone? Yeah. 6. No, we're gonna do 0.5 increments on it. 5.5. No, it has to be lower than 5.5. 5. 4. Okay, we're gonna roll them here, so it's gonna be round. 3. 2. And okay. We're gonna go with 2 then. Just provide your market. 20 to 22. All right. Who here thinks it'd be less than 20? Who thinks it would be more than 22? All right. We are about to find out. All right, we're gonna roll the dice, okay? Okay. It was 19. So if you thought it was less, you would have been right. Okay. That's fine. Okay, similar question. I'm going to toss 20 coins. What is the total number of heads? All right, everyone. Who here wants to provide the spread for this market? 4. 3.5. 2. 1.5. 1.5? All right. I'm going to show you something real quick. Very quick. I wanted to go back to this picture. All right. Just as a quick reminder, Maisha and Monesh were never market makers. Akbar, Shaw, and Ayuji were market makers. Okay. Okay, we're going with 1.5. Yeah. Okay, so with 1.5, what's so 10 to 11.5. Okay. So we have it. Here's the generator. So he's doing 10 to 11.5. If you believe it's less than 10, you should sell at that value. If you believe it's going to be more than 11.5, you should buy at that value. I guess statistically speaking, less than 10 is more likely. All right, we are counting the number of heads, which is going to be here. Are you ready? Flip. It was 12. So it ended up being a bit more than 11.5. All right. All right, everyone, just if I could have your attention just for a second. Hello, everyone. Sorry. Hello. Okay. Hopefully now you've gotten a taster of what the game would be like. In the actual game, I do hope that you provide a bigger spread. Otherwise, you will not survive the game and you'll be eliminated very fast. Being the market maker, sure, can be good, but there is a risk that goes up exponentially as you provide tighter and tighter spreads. There is such a thing as an optimal amount that's not too big nor too small. All right, just going on to the actual logistics of what the actual hackathon will be. This is our GitHub page, all right? And if you go to hackathons, very simple, you're going to see how this, let's see. Second. Oh. Just didn't push it. Let's see. Let's see. Okay. I'll just go. Okay. If you go to the GitHub page, I'm just going to push this now. Okay. You'll see that there is a hackathons folder. All right. On this hackathon folder, let me just make this a bit bigger for everyone. There is a market making like folder here, right? Inside here, you've got hackathon data. You've got data for 9 different stocks. All right. You've got training data that you can use to train your models on, and you've got test data. The test data for each round is a single stock. You get 4 predictors, right? Or in this case, 5, sorry, column 0 to column 4. And you are meant to predict the target. And this is what we're going to be trading live on the day. So this is the work that you do at home. And at home, you're probably meant to like also try and measure uncertainty up to a certain point, because you will lose money on average if your tight spread, if your spread is very low. Okay, here we've got the spreads. We are running a quick session this Friday with the Kaggle team for people that are complete beginners, that have not done machine learning before, that don't know how to do a simple linear regression model, just so that you get started. Here I created a start your submission file. I've not done much. I just showed you how you can read the CSV file and turn it into a pandas data frame, right? So column 0 to 4 would be your predictors. The target is going to be the value that you're trying to predict. So you can imagine these are stock prices, right? Maybe if you want to, I don't know, look at another data set, you can go data set 2, pandas, we read the CSV, and this will be in Hackathon data. Data, and I think this would be stock to train.csv. Yeah, then you would have another data set here, right? Right, this data set looks different, as you can tell. Different number of predictors. For this one, there's 15 predictors. It's a single target. All data sets are different. Some are easier than others. So we do, well, if you want to be smart about this, you should be providing smarter spreads, right? Also, yeah, the lesson from today should be if you don't have to be the market maker, right? There's no, like when we played this game with the committee members as well, everyone really wanted to be the market maker and provide like very tight spread. Like if someone provides a very tight spread, that's better for you. You're going to make money on average. You can let them do that, right? They're probably going to be out of the game very soon. So for each data set, there's different amounts of noise. This data is all generated. This doesn't correspond to the real data. There's no way of cheating. But there's different levels of noise. You should be coming up with tighter and wider spreads, depending on the task at hand. Okay. Does anyone have any questions up until this point? Yeah.
Few questions. Firstly, do we have a leaderboard like throughout the duration of the hackathon, or do we like get directly the board like training?
There will be a leaderboard that will be updating live on the day of the hackathon.
And second, there are. I'm gonna assume there are deadlines for each stock, right? Or are we supposed to like submit each and every data?
You're not meant to submit any stock. You will do it live on the day.
Oh, okay.
You will submit the bid and ask spread live. The reason for that is that I do believe that your strategy should change depending on what spot you are in the leaderboard, right? Maybe if you're not doing really well, you might want to risk more money in hopes of having a swing upwards. Maybe if you're top one, you don't want to take too many risks, right? So you're going to get that possibility in the day. Yeah.
I just wonder, does the test data remain the same even on the live hackathon? Like on the day, for example?
Yeah, the test data. I mean, the test data, you only have the predictors, right? You don't have the actual target. Those I have myself. But yeah, they are the way in which I obtained the test data is the same way in which the training data was generated. So yeah.
Too late to break new team.
Huh?
It's too late to break new team.
Not specifically. No, they'll just come back to me. Yeah.
What time is the Friday session?
The Friday session, Nish?
4:30 to 6.
At 6, and yeah, like if you just join the WhatsApp group chat, we'll put an announcement out.
Can you provide a general data description because it's annotated, so it can be a bit difficult for us to guess.
There's absolutely no description here. It's just raw numbers. It's synthetically generated.
Okay, but we can get confused because like we can actually analyze it as spread or rather than just one person.
Huh?
The columns here are not really annotated, so we can just analyze it as spread. Or
Well, one is target and column is predictors.
Okay, that's it.
Yeah. Yeah.
How would you make money if you're not the market maker?
Huh?
How would you make money if you're not the market maker?
If you're not the market maker, like I don't know. Imagine I provide a bid-ask spread that's between 14 and 15 pounds, right? If you, like in real life, right? If you believe the fair value is somewhere in between, you just wouldn't buy or sell at that price because statistically you'd be losing money. However, if you thought the price was higher than 15 pounds, you would buy. If you thought it was lower than 14 pounds, you would sell. If you think it's somewhere in the middle, you do nothing. Unfortunately, on this hackathon, you will be forced to trade a small amount, but you will be forced to trade against the market maker in all rounds. Yeah. Any other questions?
Will the actual simulations happen next week?
Yeah. Simulations will happen next week someday. By the way, I forgot to say, we've got a quantitative researcher from a top bank. We're not advertising the bank, but he will come give a career talk. He's the guy that founded the society. So yeah, that's another thing we've got going on as well. Any other questions? Yeah. From now to next week, you're trying to get very good at predicting the values from these data sets. You're trying models, you're trying to quantify uncertainty. You can spend however much time you'd like. Like if you use one of those simple linear regression, you might be done in an hour. If you want to try something fancier, it might take you longer. Yeah. Sorry, everyone. Yeah.
Vector values and output a single value.
Yes, correct.
Not a spread.
Well, you come up with a spread. Like your model, if you create a machine learning model, it's going to spit out what it thinks is the true value. You can also create a model that actually just spits out the actual value, the standard deviation, or be that spread. But then you'd have to come up with an environment where you can. Like that. That's completely up to you. If you want to do that, it probably will work better. Yeah.
If you don't do that, you guys will force us to make.
No, like the simplest way of approaching this is just to come up with what you think is the fair value. Let's say it's 100, and just guess okay, I'm going to go between 95 and 105. There are smarter ways of doing it, right? The smarter ways of coming up with a spread, especially depending on what situation you're on with respect to the leaderboard. Yeah, how much money you have, but also what position you're in the leaderboard, right? Even if you've got quite a bit of money, but you're top 12 and it's the last round, it'd be silly for you to trade very little because,
How do we get access to what position you're in the leaderboard?
It will be live on the day. You'll see it. Yeah. Yeah. I have to push it. Okay. Questions?
On the day,
Yeah.
price of the market. And if it's not the type, then it's not bid ask price the price that you're going to buy and sell.
No. So all of that disappears, and then you trade against the market maker. Manually, yeah. I mean, you can build the algorithm that gives you numbers, and you can put it up manually, right?
And then so on the website, they're going to be like buying this price.
Yeah. Everything will be updated. The problem is we hosted it on Streamlit, which wasn't very well. We'll make it happen.
Do we keep round one? Round two.
Right.
So you can build it up.
Yeah. No. I'm gonna. Are you guys on the WhatsApp group? Okay, you should definitely join the WhatsApp group. Also, if you're not part of the, are you part of the Machine Learning Society? Yes, no. Okay, you should talk to that guy and register now. You're not going to deploy. You are going to do all of your predictions in your one locally. You're not deploying the network. Yeah, exactly. That's up to you. Like all of the design is up to you.
Can we ask notes in the WhatsApp?
There's a Discord group chat for it.
Can it you be there?
Yeah.
So all the rounds will be happening from 4 to 6.
Yeah. 6 to 8 p.m.
Will there be the talk and discuss?
Will there be enough time?
Yeah.
There will be enough time. Like you're gonna come here with your predictions already, and with your mind made up, pretty much. So I'm gonna give you like 2 minutes per round.
So the website would be better.
Yeah, no. We'll fix the website. Okay, so Are you on the WhatsApp group chat? It's called no. Okay. Join the WhatsApp group chat, or if not, or join the Discord and put it there. Put it somewhere. Like, let us know. If you can join the WhatsApp group chat, just go to the Student Union website and you'll see them there. Just do that. You shout at someone. All trading with each other. Yeah. No. You only trade with the market. Because you're basically your spread was 13 to 13.5, right? No one in that round bought at 13.5.
They're buying this one.
Yeah, they're buying from this value, they're selling from this value. Everyone sold for £13, right? So everyone is selling for £13, and they're going to have violations because they're selling. It turns out that the true value of that asset was £13. So they have to buy something for £13. So how much did they make? Zero. You're on the other side of the trade, so you don't make nothing. I mean, if you believe it's 13 and you want to profit off of that, then you should do 12.5, 12.75, 13.2. You should make sure that your value falls. That way, they sell at 12.75 and have to buy for 13, or they buy at 13.25 and then have to buy at 13. They buy for this and they have to sell at 13. Either way, you make 45 cents. Oh, they sell for these and buy for 13. They're confusing at first, like but there's two sides of the trade. Yeah. The bid is the lower one, the ask is the higher one.
So the bid is
the bid is the price at which they're willing to buy. The ask is the price at which they're willing to sell. But you buy at the ask and sell at the bid if you're not a market maker. Yeah, if you're not the market maker, yes. But the market maker buys at the bid and sells at the ask. The ask is the high one, and the bid is the low one. So if you're the market maker, life is good for you. Buy low and sell high. If you are the if you're not the market maker, then you have to buy high and sell low.
So how does the market make?
Huh? Well, if the true value is just higher than or lower than what the spread is, they can lose money, especially, or I guess specifically if many people are trading on that side, right? If they manage to get the same number of buyers and sellers, they will always make money. Because I'm buying for you at 12.5. I'm taking that asset and immediately selling it to you for 38%. I don't own the asset anymore. So the problem is when I'm quoting 12 and 13 pounds, the true value is 15 pounds, and now everyone is buying from me at 13 pounds. Then we have a problem. Because in capital markets, like market makers, they have to adhere to certain regulations. So if they're quoting 100,000 shares at 13 pounds, and someone just comes and says, actually, I'll buy the 100,000 shares, they have to sell them. They cannot just say like, oh, actually, no, I'm gonna, no. You're forced.
So the aim is to sell it.
Well, the goal is always to sell at a high price. Yeah.
The higher price is
The lower price is the bid, the higher price is the ask. Just think bid ask, lower high, bid ask spread, the lower the high. Yeah.
I understand the
Spread is out of the
Yeah.
initiative.
So now how all the other guys, the teams, they have to buy and sell according to bid and ask. They
Yeah.
decide it beforehand, so
No. So whoever provides the title spread becomes the market maker, and then clean sheet from there. You observe the prices and you decide if you want to buy at the ask or sell at the bid.
how many items do you have to buy?
It has to be at least 10 shares. And the stock values will range somewhere between $90 to $400. Right, so if it's $400, you buy 10 shares, it's maybe £4,000. If it's 90, it's maybe like 900. You're probably going to have to trade around that volume on each round. Like they're going to be roughly, like you'll see when you have a daily set, but they're going to be roughly in the range from 90 to 400. And you're going to be forced, if you're not the market maker, you're going to be forced to trade 10 shares. Yeah, you'll see that on the
first we have second everyone
Yeah, after we've done all the buying and selling. The limitation that we have is that we might not necessarily have the same number of buyers and sellers. Because we've got a closed market, it wouldn't make sense. That's what people really want to do. But yeah, like basically after that, we just settle with the price.
In terms of when it comes to that buying and selling, I'm just going to just say how many shares you buy.
Yeah. You're going to see team, whatever is the market maker. They're reporting this price. It works amazing when you do it with 7 people. Yeah, like. Yeah. Where's the room? Are you're not on the WhatsApp. Join the WhatsApp. Look, if you just go, you join, you'll get the announcement. You'll get it soon, like either the end of today or tomorrow.
It's almost the actual trading. That's taking place like as well at once or away from here.
It'll be on the day. Yeah.
That's next Wednesday.
Next Wednesday, 6 to 8 p.m.
Okay. And so before then, we're just coming up with our number.
Yeah, exactly. You have the data sets. You know, like here's the data, right? You have to, for the first stock, round 1, right? You have to train on this data, and you're going to be tested on this observation. So I'm telling you, given these 4 variables, I don't know, you can think they're whatever. You can think they're volatility, the price from yesterday, it doesn't matter, right? Like the input values, they're somewhat random. The target is based off of the input values, and it follows a very specific rule. That's very hard to get. But yeah. So yeah, like then you train with stock 2. This data set is bigger, right? Loads and loads of values for this one. So maybe you're more certain, and this is your test. So the way in which you should think about it, I think it's clear when you have this data set, is that call 0 to call 4 argues features of the stock that you're using to determine its fair price. Yeah, features of the stock. So if you were to do like equity research, it's like maybe you're using data from the company financials, like maybe you're just looking at the balance sheet, or you're looking at what the interest rates are in the economy, and you create a model that takes that and outputs the value of the stock. The value of the stock, which is what you're trying to predict, is the target. Okay. So this is like this. As you can see, this resembles more stock prices. This. This is what you're trying to predict. Basically, you can use these values to predict this.
To predict that.
Yeah. Like, have you done linear regression before? No. We've got lectures on that. On the like, if you just like look us up on YouTube, like there's a few lectures on linear regression. But basically, you can think of it as like estimating like a couple parameters. You're trying to estimate beta 0 and beta 1, for instance, and you have a model that looks like this. Beta 0 plus beta 1 x is going to be equal to your target. So if you
Equation of a line.
Huh?
Equation of a line.
Yeah, that can be. That's a very simple model. Yeah.
So those two represent like two different values.
Yeah. So beta 0 and beta 1 would be parameters that you're trying to estimate from data, right? You can have a model. If the model has, instead of 2 parameters, it has 3 parameters, it would be beta 0, beta 1, x1. This can be call 0, right? The value in call 0, plus beta 2, x2. This could be the value in call 1. And you have to use that to estimate the target. This would be a model with 3 parameters.
And that's what we're trying to find. Like we're trying to get a model.
Yeah, you're trying to get a model that predicts that. Yeah.
That predicts the target.
Yeah. What's your background? Like, are you like economics or maths or
Computer science.
computer science? Okay. Look into linear regression. I recommend you like have a look. Quick tutorial how to do linear regression. We've got an amazing video on YouTube on how to do linear regression. If you just go YouTube, this doesn't work anymore. You're gonna see it on YouTube. If you go to the Queen Mary Machine Learning Society YouTube, so I think we can probably we have a few videos on linear regression. The best one for you is this one, 22-minute video, master linear regression with PyTorch in 20 minutes.
Becoming harder now because
Yeah.